The head of investment research is here with us in the Lagos studio at Meristem Securities. Praise Ihansekhien, and also in London, chief economist of Streetnomics Limited, Gospel Obele. And I promise we didn't do it on purpose, where we have praise and gospel with us. It was completely random. Praise, let's start with you here in Lagos. Praise, there was a lot of debates with respect to this particular decision. There was, talk of a hold. There were arguments for a hike. Let me start with you. What did you make of what we heard or saw?
I expected a 200 basis point rate hike, and I see both sides. I see the sides that were clamoring for the hold. I see the sides, my side, that were clamoring for the 200 basis point rate hike, because at the end of the last meeting, the CBN was clear. We are still going to continue fighting inflation. That's our mandate right now. And then, that's what one of the things that fed into us expecting a continued hike. But we're not expecting the same 400 basis point magnitude we saw the last time. So, basic expectations like that, took us to 200 basis point Meristem research. But then, of course, people were also, of the opinion that the monetary policy rate has a lag effect on inflation and the economy. So that's room to allow the 400 basis point work before you continue hiking for that. That's where the hold stands, the proponents of the hold stand, that's where they were coming from. But I think a lot of the market participants were actually more tilted towards the hike. All right.
Gospel, thanks for joining us over in London. Gospel, what did you make of the decision? Was that also in your forecast as well?
Well, to be quite honest, I was more I knew it was going to be a rate hike, looking at the way events had unfolded, but I was expecting it would be more intelligent or smarter to hold, in my own opinion. But I definitely was going to be a rate hike, because I think that we are not in any way close to beating down inflation with consistent rate hikes. And we've seen how, in many cases, the inflation has also evolved into a deep cost of living. So even in climes where rate hikes, in quotes, have brought down inflation, they are almost close to the brink of recession, even not a recession itself. That's because the dynamics of the cost of living crisis and the cost of doing business vis-a-vis due to the previous rate hikes has further worsened the realities of the average individual or the average Nigerian in this context, meaning that they've had to spend more blocks of their income in trying to survive, in trying to buy bread, a basket of tomatoes and all that. And you can't deal with an inflation that is non-monetary with a conventional monetary approach. So interest rates and hiking up interest rates are at best conventional monetary approach that is sort of like a misfit, in as much as it is necessary. It is not sufficient to deal with the inflation we are constantly faced with that is largely non-monetary than monetary in its nature.
Excellent. Okay, so I'm glad you made this point, because some are saying that the rate hikes are not enough. So I want to get both your reactions to Giulia Pellegrini. She's the senior portfolio manager with Allianz Global Investors. And I think it was this point was picked up when she was speaking to the media. If we can get her quotes up here. She essentially said that these rate hikes are not enough. And hopefully we get the quotes up in a second, but I can actually read it up to the both of you. She said essentially that okay, here we go. So here they are. She said that the phased approach the CBN has adopted so far has not succeeded in bringing back foreign investors to the local bond market in mass. I think that's the key point there, in mass and with confidence. And then she continues and says, to be clear, what the CBN has done is taking the right steps, positive steps forward in recent weeks, but it needs to step up its tightening action in pace and decisiveness, or it risks losing foreign investors' attention to other opportunities in the frontier market space, such as Egypt or Kenya. Praise, well, let me come back to you. What do you make of her comments?
For me, I think that she's lumping two different monetary policy committees together, two different regimes. She's saying, okay, the rate hike is not enough, and then we cannot rely on rate hikes alone, from what I understand from that conversation. But then we have had a monetary policy that did not, before now, that did not, transmit to the market. And now we are having a monetary policy committee that is transiting to the market. So I think there's a difference there. So, the fact that we are having, we are in a period of rate hikes that are also reflecting in fixed income rates in the market, it's definitely signaling more positives to foreign investors. We've had more foreign investors come in this year alone than we probably had throughout last year.
Right.
So there's a better signaling effect with this monetary policy. And of course, rate hikes alone would not solve the entire problem. There's still the challenge of FX repatriation, which the monetary policy committee and the CBN has shown that they are committed to fighting and committed to making sure that foreign investors can repatriate their funds. So I'm not sure that I'm on that part where to say, oh, the rate hikes are not doing it. Personally, I was proposing for them to do more than 200 basis points. But of course, we need to also be realistic to what's possible.
All right, Gospel, what do you think? What did you make of Julian's quote there with respect to? I think she sounds pretty hawkish.
I mean, I think globally, the concept of rate hikes has favored the financial and monetary markets over the real sector. And that's why many more economists have moved closely to the brink of recession, as the case may be. However, the argument for or against investors' confidence of foreign investments, looking at vis-a-vis Egypt, Morocco, and Kenya, is largely on the ease of doing business than just the argument for monetary policy interest rates only. So in as much as the argument makes sense that she's making, I don't think it's comprehensive in context to attracting foreign investments, because the other countries you're comparing to are graded on the grounds of relatively easier terrain to do business. All right. So even if the central bank tightens some more, it's still not a given that foreign direct investment or foreign investment of some sort would significantly increase enough in a sustainable way. And if you get what I'm trying to say, you still need to deal with the argument of the issue of insecurity, the fact that access to market is still a big challenge, access to borrowing or cost of borrowing for the MSMEs that drive economic activities and economic growth and development are still, literally, suffering the effects of previous rate hikes. So I don't think a further tightening will be the solution. I think more or less an easier and enabling business environment coupled with the current interest rates regime would foster more investors' confidence in Nigeria than further tightening within the context of monetary policies.
All right, now, normally, praise and gospel are supposed to be moving in unison, but I'm sensing a divide here between the two of you, where praise seems to be on the security side. Gospel is looking more at the real sector. But what's your response to what gospel saying?
I think the CBN has been very clear. They are sacrificing growth.
Right.
They are not very interested in pushing growth in the economy right now because the inflationary environment is largely getting out of hand. We are seeing 31.7, and if I'm going to be so bold, I think that we're going to see another up to 33% this March.
Right.
So that situation is already very hostile for businesses to operate. So that needs to be tackled before we move on. And of course, in the short term, according to economic theory, it's one of the things that would help your exchange rate and help your business environment is attracting foreign portfolio investment. I agree with him in one part, which is foreign direct investment, as is people that invest in the economy itself. They will not come in now because the macroeconomic environment is still hot. But that foreign portfolio investment that would drive down FX, basically improve the confidence in the economy. I think, I tend to align with the CBN on what they're doing right now. So,
Okay, so let's get to inflation, and we'll get to the FX. So at least we have a chart going to just March 11th up until now. Gospel, let me. We've already put up the inflation figures. I think Praise has already showed her hand, saying that she's expecting 33% year on year for when March figures come through. What's your outlook for inflation, Gospel?
Yeah, my outlook for inflation is definitely going to be higher than what it is today. Maybe more in the range of 32.something%, maybe not exactly at 33% yet. I strongly believe that the central bank cannot bring down inflation with further interest rate hikes. Interest rate hikes are necessary. Don't quote me, they are wrong. They are necessary, in the trajectory. So the central bank is, on the right path. However, it is insufficient in the context of the type of inflation we're dealing with today. The type of inflation we're dealing with today is strongly driven by food and energy prices. And on the grounds of which, are strongly informed by international, global, and regional dynamics, all right, which are largely non-monetary to an extent than monetary. If you compare that to other economies where interest rates have been used to sort of chase down inflation numbers, they've succeeded. However, you're also seeing a worsening cost of living crisis, all right? And the concept of inflation and cost of living have increasingly become divergent, because when this whole conversation started about 2 years plus ago, it was just an inflation conversation. However, because it permeated deeply into the everyday basic survival needs of the average Nigerian, the business personnel, we've seen that more people at the economic base are literally struggling. All right, and you cannot, bring down inflationary numbers if your current inflation is toppled up with further artificial, some form of speculation of somewhat. So take, for instance, now, people who sell wheat and make bread and all that, they already speculate that these prices will constantly increase. And as a result, there's an increase in the best use of inventory to ensure that they gain maximum profit or have no more profit and all that. So you have all forms of economic behaviors playing out because the fundamental construct of inflation vis-a-vis the cost of living that has expanded from that is largely hinged on the fact that it is non-monetary. So using interest rates to sort of drive down inflationary numbers as much as it is necessary, it cannot, in the Nigerian context, really be sufficient to bring down inflation.
Okay, so in that regard, then, I guess, what does the fiscal side need to do in order to get things down? So I'll come back to Gospel. I'm sure Gospel will have his own ideas of what fiscal side needs to praise. What does the fiscal side need to do in order to get us to where we need to be as far as tempering inflation?
Gospel, he hit the nail on the head on some points. It's important for us to tackle food insecurity. The CBN governor also alluded to the fact that some of the main drivers of inflation include the food basket, and the prices of food are significantly increasing. So the fiscal side have the significant responsibility of increasing, making that food security environment better in Nigeria, and of course reducing the insecurity we are seeing in Nigeria. Gospel actually is making my point for me. He's making my point to say it is necessary to hike rates, right, but it's not enough. Right. So basically, I think we're on the same page. Okay,
so praise and gospel are on the same page. Gospel, what does the fiscal side need to do?
Is the fact that the relationship between the central bank governor and the president is a very strong prospect we can leverage, all right, for really fast-paced growth in this area. So there has to be much more strategic interventions, all right, to grow the supply base of the FX, give or take, all right, and that would mean the very first low-hanging fruits will be our services sector, all right? You have about 55 to 56% of the Nigerian economy right now on the bulk of services. Yet we don't have a comprehensive, exportable, and intelligent industrial services sector policy, all right, that facilitates for foreign exchange receipts and all of that. So we need to do something about that. Then there are so many MSMEs who are ready to export. Emphasis on ready to export. However, that readiness is crippled on the grounds of access to market challenges, all right? Access to finance challenges, the exportation dynamics and the interest rates and all that, foreign exchange and all that. So until we begin to close that, create a one-stop shop to help more Nigerian businesses export, all right? Until we begin to latch on this low-hanging fruit, we may not be able to sustainably secure FX supply. And if we cannot secure that, then the future for exchange rates and all of these things are really not on the really positive side, to be quite honest.
All right. Point well made. Let's get to securities. Praise, what do we expect, if we look at the last Treasury bill auction, do we expect now with this hike that, I guess, money market securities go up?
So there's an auction happening tomorrow. And
that would be real quick for them to react.
They will. Yeah, they will. Yeah, the rates are expected to go up. Coming into this year, the expectation was that fixed income rates were going to increase. They just had to increase because, you need to attract that inflow into your economy to do something about the FX situation in the short term. I agree that they are not sustainable. This means that CBN is taking to hike rates and to increase the rates on money market instruments, the fixed income market. They are not sustainable in the long run. We would need the fiscal side to wake up and improve trade. I think the last time I was here, we also talked about the fact that trade needs to be significantly improved, for us to see that long-term effect on the FX. So for now, we are still going to see that increase in fixed income rates going to the next auctions that are coming up.
All right, Gospel, I know you're focused on the real sector. You're focused on the man and the woman on the street. But do you have anything to say for for the securities, for TV? Gospel, you're an investor. I know you invest in Nigerian securities, even though you're all the way in London. What do you make of where securities could go from here?
Well, the future is quite promising, preferably if more actions can be taken to secure the value of the local currency. And that lots of work has been put into that recently, and that's quite a plus as well. And also coupled with the fact that interest rates are consistently on the rise, that's also some level of protection when it comes to returns, yields, and all of these things for investors or even average individuals who are seeking to put in monies in assets and all of that. So I think it's quite promising. The central bank just has to be able to, chart a sustainable path towards ensuring that the naira consistently increases in value, and it probably would also have to lead to some level of partnership with the fiscal authorities as well to be able to secure market value when it comes to returns from securities and all of that in a sustainable way. All
right, I'm glad you mentioned the naira, Gospel, because that's what we're going to next. The central bank did put out a notice to BDCs. They've tweaked their BDC sales. I want to get both your thoughts on this. I think initially the last set of sales was, actually we're jumping ahead. We're not going to go to the chart just yet, but this is the notice to the BDCs. So essentially they were selling them at 1,300. It was 20,000 naira, $20,000. Okay, yes, there we go. And then it now became 10,000 to the BDCs. The rate was 1,300 before. It's now 1,251. The spread is not above 1.5%. Prior was 1%. And then there's sanctions for non-compliance. Praise, what do you make of these tweaks? And they say FX sales to BDCs.
I think it's very important. When the first announcement of $20,000 weekly was announced, the first question that came to my mind is how sustainable is 20,000? I mean, of course, they also came out and reduced the number of BDCs that they were going to serve.
Right.
So this also gave some hope. But then I think this was necessary. They had to. I didn't think 20,000 USD weekly was going to be sustainable for them. And of course, we know that putting caps on how much they can sell, and also selling it to them at 1,251 is already, reducing putting pressure on what they can resell that exchange rate for. And then this is just part of the things that the CBN is trying to do, to short-term fixes, right. I would reiterate, which I think the CBN is trying to do all these things to pressure the exchange rate markets and bring down, get some FX appreciation in the short run, while, the fiscal policy eventually, gets up and does some things. But of course, it's not sustainable if we don't see that action from the other side of it too. I think 10,000 weekly might be a bit of a stretch, yeah. But then it's better where we're coming from 20,000. That was, absolutely not possible.
Gotcha. Gosso, what do you think as far as the BDCs are concerned?
Well, I think we've sort of touched on this sometime in the past, Reuters, and I mentioned that the future of the Nigerian exchange has to find an intelligent way to incorporate the Bureau de Change or the parallel market. You can't unify just yet. It's a very complex dynamics, and I'm glad that lots of efforts are being shifted towards incentivizing the Bureau de Change operators, to play and to act accordingly. Like my colleague said, the big ticket questions will be sustainability, and for me, sustainability is the fact that the value of a currency is not really hinged on the dynamics of interventions that have been introduced by the monetary policy guys. It's more around the productivity level of that local economy. So every of these managed float in quotes or trying to interfere with market forces is again, at risk of the fact that we are not producing, or we're a very highly consumption-driven country. And consumption isn't bad, but you have to produce as much, all right, to meet your local consumption. So if we're not doing that at a necessary level, then we will not be able to, win this fight against the foreign exchange. That's number one. And then at a more sufficient level will be, how are we lobbying institutionally to protect the currency in the grand scheme of things, especially trade within and across borders, all right? And that hinges largely on, can I sell something from Nigeria to Kenya and exchange directly from Naira to shillings without a third-party currency interference, all right? So these are bigger weight questions in the long term that the central bank will have to deal with to protect the value of the currency if we are able to succeed on the productive, we are able to succeed in terms of ensuring Nigeria is a very productive economy in the sense. So whilst these initiatives are good, I do not think that they will sustainably help the value of the currency. And that's because you're trying to manage BDCs at arm's length and try to interfere with market forces. However, if we deal with the basic dynamics of supply and disincentivizing, that taste for foreign goods and all of that by producing locally, then we can be able to talk about the necessary and sufficient conditions to achieve a sustainable exchange.
All right, and thanks for mentioning trade and the Nigeria-Kenya example. The Afrexim Bank, of course, has PAPS, that Pan-African Payment Settlement System, to where each side is supposed to be able to pay using local currencies, and they will act as the middleman that converts. And so we'll see how that works out. But thanks for the point. All right, listen, we had that FX chart just a moment ago. I guess we only have a few minutes to go. So I guess praise and gospel. We've seen a bit of an appreciation, at least from going from March 11th up until the 25th, from about 1,600 naira levels to the dollar to about 1,004 now. Maybe you've already given the answer. Yeah, there's the chart already. So sustainability, I mean, what needs to happen? I
think, like you said, we've already, touched on this. Going at the way we are going now, of course, we are not going to be able to sustain this appreciation in the long run. I remember 2016. When there was also that need to bring in a lot of FX into Nigeria, and then we were seeing those rate hikes happening. Eventually, I mean, we're here saying a different story. So if we do the same thing we did then only, we are still going to come back in the next 2 years, even 1 year, saying, oh, the FX exchange rate needs to appreciate. So this current appreciation we're seeing, of course, it's likely to continue for now, given all the pressure that the CBN is, putting on the market, and apart from even the rate hikes, we've seen almost 15 circulars so far this year, so many circulars, and they keep doing a new thing and just sitting down to think, what else can we pressure? Where can we pressure the banks? Where can we pressure the oil and gas companies? These are all things they are doing to kind of pressure that FX market, which should keep that appreciation in the short term. But it's very important for us to also see some more sustainable activities that would keep the exchange rate appreciated in the long term. Speaking of circulars, at one point there was a joke on social media that CBN stood for Circular Bank of Nigeria because of all the circulars. Gospel, in fact, do we have that sugar thing on I want to show this to both of you as we round off. There's I think it was an illustration or a comic. Yeah, there it is. Yeah, Gospel, let me start with you. I think it's from somebody called Fame Aludo. It says, when the dollar was 1,900, a bag of sugar was 75,000 naira. Now that dollar is 1,450, a bag of sugar is still up to 87,000. Is the dollar the real problem in Nigeria? Gospel, what do you make of this illustration?
Illustration summarizes everything I've been saying on the call. Number one is the fact that the central bank is trying to look good on the books, and they are patching the problem really nicely. However, the approach is necessary. Just like when you're breathing, it's necessary for you to breathe to stay alive. However, it's not sufficient. The fact that you breathe does not mean you'll be successful. All right. So to be successful at this will be, hitting hard on the core structural dynamics or deficits, which we all know about. So even if the dollar the naira is seeming to appreciate against the dollar, we've also seen that prices in Nigeria haven't really gone down. And prices don't really go down in the sense. And that's because the economic framework, the cost of doing business, cost of living, and how prices move from point A to point B are largely woven around market behavior than just an interest rate policy. And that's the biggest, what I want us to take from this conversation today. So if lots of arguments or lots of efforts are not plugged into the behavioral element of the market in terms of sustainability wise, I do not think that we will keep chasing inflation, and to remain a vicious circle. And I don't think we can bring it down with interest rates either.
Praise, what's your final comment? Because we got to go.
Prices are downward sticky. What this means is prices will go up faster than they would come down. So it's true in a lot of markets, but I think the one market that is very, very true in is the Nigeria market. So that illustration, just basically says that, it would go up, but, it will take a while to go down. So, a lot of things need to happen for us to see sugar is... For companies to produce sugar in Nigeria, they go through a lot. They have to import, and then those importing in the free trade zones, even bringing it costs them a lot to import from Brazil and all those countries. So maybe I see the points of this illustration, but then prices are downward sticky. So
Praise that's my final with Meristem Securities, Gospel with Streetnomics. Thank you both for taking us to, I guess, economic church this afternoon. It's been a very lovely service. Thank you both. I really appreciate your time.